So now in this next unit, this final unit of our semester, we're going to take a look at personal finance, and we'll start off by talking about different ways that you can save money, so savings alternatives and also investment alternatives. And so we had talked in the previous unit on compound interest, how you could either invest money or you could borrow money, but we never really talked about the actual investment vehicles that are available to you and so forth. And there are really a myriad, quite a number of them that are available to you. So when we look at different savings alternatives, a couple things we want to be aware of. The term investment is money that you're going to give, like your own money that you give to someone else or to an organization, and you're expecting that they are going to pay you interest. So you're going to make money on that investment. That's your expectation. And sometimes that's indeed the case, and sometimes not so much. A loan is obviously money that you borrow from someone else, either an individual or an institution, and they're going to charge you interest. So let's say you borrow $1,000, and when you're done, you owe, let's see, the person that you borrowed it from, maybe your mom or your dad or something, you owe them $1,100. So you pay $100 in interest. Okay. Interest is always the money that you either earn on an investment, that's the money above and beyond what you invested, and it's the extra money that you owe when you borrow money. So interest can be both a good thing and potentially a bad thing in the sense that it's the cost of borrowing, or it's what you get when you invest. Okay. So when you think about going to a conventional bank, generally there's two main types of bank accounts that the people will have. The first one is a checking account. And a checking account is what you'd use for your everyday banking. So generally, your money goes in and out of this account. This is the account that your payroll is deposited into. If you get a check from the government or something, it gets deposited into there. It's the money that you draw out when you take money out on your debit card and so forth, the money that you pay your credit card debt down, and all types of things. Okay, so generally, you pay lower interest, or rather money that you have in your checking account pays you pretty low interest. Okay, so yes, the bank is paying you for the privilege of holding on to your money because they use your money and they turn around and they loan it to other people and they make money off of it and so forth. So they do give you a small cut, but the interest that you earn on a checking account is very, very small. Okay, and generally speaking, depending on the type of checking account that you have and the options that are available to you, you're going to pay a certain amount of money to the bank, and there are certain conditions, and they vary depending on the account type and the institution. So each of the major banks or their subsidiaries will have different forms of checking account, different types. They might have accounts for seniors or for students or for businesses or for individuals. And you have to do some research and investigate them, and that's one of the opportunities that you'll have as part of this assignment. Savings accounts are another form of bank account that you have with a bank. Generally, it's a safe way to invest money. You're not going to lose the money that you put into a savings account, in the sense that if the stock market collapses, the money that you have in a savings account is safe, it's protected. Because any money that's deposited with a Canadian bank up to $100,000 is protected uh, by insurance that the Canadian government provides. Okay, so savings account do provide a higher rate of interest than a checking account does. It's not a phenomenal rate. I don't think it often keeps up with the rate of inflation even, but savings accounts do pay you a little bit higher interest. There are certain fees and conditions, and again, that depends on your financial institution, your bank, and the type of savings account that you have. So some savings accounts say that you can, earn, 1.5% interest every year, but as a condition, you have to have a minimum of $1,000 in there every single day. And if you go below that, then you have to pay the bank a certain amount of money or whatever. Okay. So one of the activities that I want you to start off with is I want you to go to a banking website of your choice, doesn't matter to me which one, and you're going to select a different account type, whether that's a checking account or a savings account, and you're going to investigate some of the fees and conditions under which you can deposit your money. So, for example, you could go to any one of the major banks, Royal Bank of Canada, TD Bank, Scotia Bank, Bank of Montreal, CIBC, And I think I'm gonna remove PC Financial because PC Financial is no longer a bank as it was when I originally created the assignment. But this will give you an opportunity to explore what type of banking options are out there, because many of you are at the point where you either have a bank right now, or you may be starting to be looking for a bank. And there's nothing to say that you're going to stay with the same bank all your life, but you should be aware of kind of some of the options and hurdles to get over in terms of setting up a checking or savings account.